3, 2, 1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth. Hey everyone, welcome to Get Technical. I'm Neil Hamilton. I work at Benzinga. This is a plant. It's the only plant I have. I haven't watered it for a while, so it's kind of starting to fall apart and die. So I have a proposition for you. Hit the like on this video or I'm never going to water this plant again. Hit like on the video right now, or this plant never sees a drop of H2O ever again. God. Okay, so I love the comment. Who came in with the damn... Who did... Tiny Pie. Okay, Tiny Pie. Always on point. Always on point. I'd say you're a big old pie. Wait, what was Jason doing before we started? Was he bloviating? Give me a 1 if Jason was bloviating. I'm gonna change the name. Here's the water right here. Here's the water, Holly. If you want that freaking thing to get some water, you hit the like button. I'll check the stats at the end of this video. Oh yeah, we got a lot of ones. Bloviation station. Yeah, that's what they would call it. That's what they need to start calling it. Whoops, I had to stream. Here's my chart, guys. Verbal bloviation. All right, guys. It's a new time for Get Technical. We're doing this shiz at 1 p.m. in the afternoon. I don't really know why. I like it because most people are on like some form of lunch break, so I'm supposed to get a traffic spike, but there's 190 of you here, and I'm very glad to have you here. So this is a very special, intimate session. I call this the Get Technical Inner Circle. So all of you that are watching right now, either live or after the recording of this show, welcome to the Get Technical Inner Circle. Just know that you could have a lot of chlorophyll on your hands if you don't hit the like button right now. Blovi Nation. All right, so real quick, just looking at XLE, XOP, oil stuff, popping. Oil sector popping. I know if Michael's in here, this guy keeps tweeting at me about how much money he's making on Vale, whatever, VALE. I get it. I'm feeling the FOMO. We'll take a look at them. But you know the drill. Let's find the sectors that have strength using our sector ETFs, and let's drill down to find the best tickers they're in. Let's talk about some. Come on, guys. Hit that like. Yeah, Valley. Oh, fine. I'll look at it right now. That's how weak I am. No, look at it. No, it's too much. No, I'm going back to XOP. Come on, guys. No, it's a COP. Whoa, wow, I'm so good. COP is in XOP. Do you know that? That's pretty crazy. Let's get some techers in here. Let's check on our techers. Number 1, XOP. Take a look at the ETF. Get rid of all my stupid drawings. Actually, hold on, let's zoom out. Sheesh. Big old thing happening here. Well, let me just get rid of my my little drawing. Whoops, excuse me. Let me get rid of my little drawing. This is what they all look like right now, guys. They did some of this. They did one of these. Then they did a little one of these. You know what that means. We call this the double. The double booty bottom. XOP's got one. So looking good, XOP. Lots of movement. Kudos to you if you did the old early entry on your double bottom. This one wasn't a strict double bottom. I will concede to you. But the other ones, some have them. All right. Nonetheless, kudos to you if you got in on this nice little breakout from the sloping line of resistance. The bottom. Muffin tops. Let's get some muffin tops with the ocean spray. Don't think too much about that, all right? XOM. I tweeted this one, and then everyone did the same thing. So Sylvia Bellrock yesterday was on the show, and you guys. I was about to buy pins. I'll be honest. I'm not afraid to be honest with you guys. I was about to buy it on a cup and handle. It was like this. One of these. Let me get this thing. One of these, like that. A little bit of this. You know? Some of this. A little bit of that. I was about to buy it. Like that. And then you guys stepped in. And you said, Neil, for you hit the like button. Quietly, you just gave it a little click. You hit subscribe, you hit the little bell. And then you said, Neil, don't do it. I said, what's that? My faithful viewers? What is that you say? I hear your all your tiny voices. And you said, they've got earnings tomorrow. And then I was like, shut up, idiots. I'm going to buy it anyway. I know a cup with handle when I see it. Then Sylvia Bellrock came on, and she's like really smart. And she said, no, don't do it. It's probably going to get like a paradoxical reaction or like, you know, blah, 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 earnings. And I didn't. And boy, oh boy, glad I didn't. So from the close yesterday to the open today, that was a 13.5% drop. Sheesh. So yeah, that's why you don't play earnings. I've learned my lesson. So that's pins. Now let's go back forward in time. I tweeted today, XOM looks like a rat snack. And then again, I heard the faint little sound of the little voices of the viewers, the followers on Twitter. Said, Neil, the earnings are what is it, 30th of April? What is it? 2 days from now? They're on Friday. You stupid. Should have bought shop. Yeah, Kevin. Yeah, should have bought shop instead. You can say about so many stocks, dude. Whatever, bro. Whatever. I get the alerts from my brokerage every single day how much shop is up. All right, so we're looking at. I hope you feel good about getting that comment in. So we're looking at XOM. So XOM is not the rat snack du jour. All right. Why? Because it's got earnings coming up, and now we know. Now we know that you can have a bunch of good stuff on earnings, and there will just be one or two things that people will hang on and dump your stock. So I've made a watch list of all the top 10 holdings in XOP. What do you guys think? ET finally 13. Okay, 13. You mentioned something. I look. Oh, geez. Energy Transfer is about to have its day in the sun. Let me add Energy Transfer to this watch list just to have it. No more distractions, guys. I'm trying to do a show here. Let me get this playlist by T-Pain up. Wait, it's kind of dark. Hold on. Yeah. Yeah. XOP. Okay. So here's one of the Dublevets, guys. Here's one of the Dublevets. Double bottom on the support line on our pivot, our automatic pivot levels. All right. How much more work needs to be done? Let's take a look at how much volume it's got. Below average volume. Okay. Earnings coming up. No go. I'm going to wait. That's not my swing trade. That's not my stock. All right. WMB. Earnings coming up. Shit. All right. Chevron. Earnings coming up. But who is it? SLB. I bet you guys forgot about good old Schlumberger Limited. Who remembered SLB? earnings behind it. With the double bottom. Look at this perfection. Let's try down to 1 hour so we can really see it in its glory. Wow. This is ticker SLB. Producer AB. Ixnay on the XOM. That plant is never going to get watered. What's below the 50? SLB? Let's get it up. It's above the 50. What you talking? Wait, hold on. Yeah, it's below it. Fair. Good call, Richard. Below the 50. This is why this is a collaborative show. You guys are the Get Technical inner circle. Good stuff. So what does that give us? That gives us a breakout point. Let's get a Fibonacci in here. Look at the 50-day line in right up with the 50% on the Fibonacci. I was going to use that as a breakout point anyway. Richard. Good looking out. Good looking out. All right, so we want to break above the Fibonacci 50, above the 50-day moving average for an entry. And yes, it's going to have a short little target because our pivot is showing up here. And I've learned to pay attention to these. Big shout out to the guy that took my time slot every morning, Mr. David Green. You know who I'm talking about? Mr. Pivots. Mr. Promises. Big shout out to him for showing me the pivot points. I have been using them ever since. And right now mine are sent for Fibonacci levels. So I'm looking for a mean looking close above the 50-day moving average, above the 50 on the Fibonacci to get into some SLB. Let's look at some other stocks in the space. COP, they're all getting stopped at the 50. XOP itself is not. KMI well above. Delete my drawings. Broken above the R2 resistance line. Almost 100. Keep smashing it because so help me God. If this video doesn't get to 200 likes, that plant will never get watered again, and it will be on your hands, traders. All right. All right. You know what's a good one here? First off, I think it's time to start looking at Oxy again. All right. We want to see that break above the 50. Yes, we do. Yes, we do. But keep all of these in perspective. These oil stocks all have the same longer term pattern. All right. You thought I was here for the little booties? No, 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 no. I'm here for the badonkadonks. Let me know, guys. Can it? No, you can't smoke that plant. Let me know what your favorite. No, not oxycodone. OXY. What your favorite oil stock is right now. Give me let me know your favorite oil stock, or just give me a 2 if you don't care about oil stocks, and I'll move on to what you guys are screaming at me. Why are the charts so dark? Must be something with your screen settings. Fang earnings in 5 days. All right. So someone said Alpha Alpha Papa Lima. We get rid of drawings here. All right. It's enough about the oil. Enough about the oil. Vio. Alpha Alpha Papa Lima. What does this thing do? Okay, it usually gets pretty well oversold or overbought before it starts to get rejected. We shall see. We shall see. I got burned on the last two earnings. Actually, this one I didn't do anything on. So this one? I don't know. The last time I had a setup for Apple, I've just been staying away from it like a kid who burned his hand on the stove. Last time I had a setup going into earnings, which I, in retrospect, is highly ironic. I lost some money. Wait. Is the screen messed up? Producer AB, is my screen working?
I can see your stream or your screen perfectly, but I'm in our streaming platform and not YouTube. Let me go to YouTube real quick and check.
How many Red Bulls have I consumed is the question. I have not consumed any Red Bulls, but I did heat up some water for my instant Folgers, and instead of the Folgers, I put G Fuel in it. So I'm drinking hot G Fuel.
I just went to YouTube and it was looking good for me. Well, the chart is black on like the right half of the chart.
Yeah, no, I figured.
Also, are you in the chart tab on Benzinga Pro?
What is there? What? No. Why are you asking that? Why are you setting that trap for me?
No, I'm saying there's like different tabs, like under the details thing or whatever, for like chart overview.
Producer AB, do you know how long I've been using Benzinga Pro?
How long? I don't know.
4 years.
Okay.
Since I started at Benzinga.
So is that a yes? You are in the chart tab.
Producer AB, get me in trouble for not using Benzinga Pro for the show. I just muted him. Stay in your box. Oh, brutal. Okay. I like to use Trading Views chart so I can get all of the technical indicators to make a more educational show for you guys. All right. The screen is unreadable. Oh my God. Put your bifocals on. Guy in Benzinga yesterday was drinking from a Pyrex measuring cup. Was his name Luke Jacoby? Okay, let's look at NAKD. I'll go there. You want to get weird? Music's fucking weird right now. Wait, NAKD.
We can't hear the music. BT.
Oh, you can't hear it?
No.
That's unacceptable. It's so weird right now, though. This is the playlist that one of the viewers gave me. Can you hear it? No, can you hear it now?
Yep.
Yeah, that's super weird. Thanks, Webb. All right, give me some more tickers. I don't like Naked. I'll be honest with you. I mean, Naked, look. Here's how I'm David Green, the guy that stole my show. All right. He's got the 212 accent. You got your pivots. We got Fibonacci. We get the traditional on here. Nope. That ain't it. Get the Fibonacci. All right, that one's spaced out. Okay, I'm not as good as David Green because these pivot points aren't really working. With the pivot points, the whole idea is that when it touches one, it rebounds in the other direction. The rebound is greater when it tries to travel further in order to hit the pivot point. I'd imagine that's what David Green would say if he were here now. But with that 212 accent that I'm super jealous of. All right, you're throwing them at me. Fine, we get X because that one's on theme. That one's on brand. Jesus, those gunshots? Oh. Just gonna change it. Talk to me, Goose. Is that a what do you call it? So we're looking at steel. We got to United States Steel Corp. We got earnings tomorrow. Goose, is that a Top Gun reference? Give me a 1 in chat if you love Top Gun. The first one, not the sequel that's never going to come out. Or did the sequel actually come out? Talk to me, Goose. Give me a 1 in chat if you like Top Gun. Give me... Oh, cool, Richard. You're a pilot. That's cool. Is it possible to fly a jet upside down on top of another jet and then give the Ruski Soviet pilot the middle finger? Yeah, everyone drop your favorite line from Top Gun in the chat. While you do that, I'm going to draw lines on United States Steel Corp. Get my Fibonacci. God, we're at such a key level right now. Give me a 1 in chat now if you believe. I need all of your collective little YouTube viewer voices to come together and say, I believe. Well done, Miles. Well done, Miles. This guy knows that when you're in a stock and you're riding it above a moving average, the second you see a dog with toupee pattern, it's time to take your profits and walk away. You see the dog with toupee, you leave it be, take your profits and go. Give me a 7 in chat. AB should be allowed out of his box. You put yourself in that box, AB. Look, here's the whole thing with Steel. Miles, the guy in chat, has been the Steel evangelist. And by Steel, I mean X, United States Steel Corp. We got our funky little double here. Touch right on the 50-day moving average. Nice little breakout. Broke above our key level here, which is our ultimate resolution of our large rounding bottom based on the previous swing high before the great plunge into our rounding bottom. Came back down. Right now we're trading right on top of the pivot point based on the Fibonacci pivots. The question is, what will earnings do? What I would like to see is for if earnings does damage to it, which I have no idea. I would love your guys' opinion. What is the dog? The dog with the toupee is a very rare pattern that comes from Dow theory from like the very early to like turn of the century that only a few traders know, that has 200 to 400% upside potential. And I made a commitment never to share it ever since I joined the esteemed brotherhood of technicians. Yes, brotherhood. It's men only. It's actually a men only organization. They're way behind the times. I would love to see this get held on this previous sloping line of resistance, now sloping line of support. I got a feeling it might be the 50 if we do get a little bit of a breakdown. But bearing in mind that we're above the pivot now, we could be in good shape for this thing to run. I think at the end of the day, we just need to keep watching X. And I think all the oil stocks, but I think steel has more of a chance just based on the way it's been behaving for resolution of this big old rounding bottom. They all have like double bottoms and ascending triangle reversal patterns on the bottom they're just so deep and so wide that the breakout potential is very big there. So keep your eyes on them. Yeah, got beat bad last time on earnings. Let's see. Yeah. Really bit the dust, but look at this. That catalyzed the other side of this running bottom that we're in. All right. So cool, guys. Feel free to take some ecstasy if you have it. This music definitely makes it feel like I'm inside a weird club in Berlin. We'll do CLF daily, and then we're going to bring on our esteemed guest. So this is in the top 5, if I'm not mistaken, for XME. Cleveland Cliffs is a steel company. And what time frame did you say? Daily? Yeah, so we're on the daily. Good Lord. Okay, I drew this line for a reason. Oh, is this why you want me to look at this? We shall see. We shall see. It's going to be a ladder up, but we might get a full resolution of this pattern, which actually looks like a double to me. Doesn't really make a difference, though. The only thing that really difference that makes is when I use my ruler tool, I go to the bottom, I draw my halfway point on the meat of the trade, which is like, where would that even be? You can see that we pretty much got into resolution. Actually, that lines up. So when I line this halfway point up with these swing highs within this sort of rounding bottom, double bottom, whatever the hell you want to call it, it lines up pretty well with the Fibonacci pivot point that we're getting here on R2, our second resistance line. So watch out for that ahead. But again, this is just another one that looks like it might have some resolution of some long-term reversal pattern. Nice. Michael, don't be rude. All right, guys. It is now my pleasure. I'm going to switch the track just for our guest to something I have no idea what it is. All right. Our special guest here, trading nomadic producer AB. Get out of your box and bring on our special guest for the day, please.
Afternoon.
How are you, sir?
Not too bad. Hanging in there, doing a little trading myself, actually.
What are you trading?
All markets. I mean, there's a lot of opportunity in the markets right now. I'm seeing, I'm a crypto trader as well. I do traditional markets, stocks. I touch options a little bit, but anywhere there's a deal. I mean, I do Forex too occasionally. It's my particular trading strategy. I don't care what I'm trading. I don't pick favorites. I go where there's an opportunity. I look for assets that are on sale. I like starting a trade, after a correction, after you've gotten a retracement of some kind down to a value area. Basically, that's my strategy. If you want, I could go over, the basics that I use to pick my trade to exit.
Please do. Yeah, I like that. What I'll tell you is that I find that I'm always behind.
Right.
On when it gets back to that point of value, I don't catch it until it's already on the move a little bit, and then I'm watching for some form of breakout, and I know that I'm missing out.
A lot of traders, respond like that. Especially the market lately has been a lot of, everyone wants to chase the hype. Everyone wants to chase, the newest stock that's taken off. My strategy doesn't really work that way. This one is an example. Just to break down, I've got a set of rules. It doesn't matter what the stock is. It doesn't matter what the market is. I've got a set of rules and I stick to them. The first thing I do when I'm sizing up a chart, I want to know the history. I want to know, where the stock has been. I'm on WTER, the Alkaline Water Company, right now on the daily chart. That's usually the daily or the weekly is where I start, and I'm going to rewind to the oldest data we have on the chart. I've got this wick down here, which shows that the price came down here. There was so much buying pressure that it wicked right back up to this zone up here. But it came back down. It tested this area again. So those are obviously important zones where at some point traders set up, a buy or a sell, whatever the case may be. So I look at the history, looking left, and looking at where this asset is now. I want to find a zone relative to that, as my bottom, as my support. If the asset goes underneath that, my reason for taking this trade is going to be invalidated. So that would be my stop. We see that this price action here multiple times over multiple years has found support at that level. And I also trade harmonics. It's a complicated subject, but basically this is a formation that happens when you get, an impulse up, you get consolidation, a second impulse, and it hits this supply line coming down. So it's a consolidation structure that usually forms after you get a retracement, and it's a momentum shifting structure. It's telling me that, this price has been coming down. This momentum shifting structure appears, and at the D point is where the pattern completes. And that's where you're going to look for an initial reaction. You also want, I use the MACD and the RSI to indicate the MACD is momentum, the RSI is strength in the asset. And at point D, you're going to want to see a reaction. And you can see we've got an initial reaction. And then generally speaking, you'll see a confirmation low. You get the spring upwards, and then the price comes back down to test what was once resistance as support. Traders want to know, is it okay to take a long position here? Given the circumstance, they want to know that there's support here, that would be, a great spot to enter a trade on this asset. Because what was once resistance is now a support line. What was once a supply line is now a demand line. And my strategy, is I'm looking for an asset that has done this. It's been marked down. I've got a nice history of where I should put a stop to invalidate this play. And that's, this would be my entry right here on WTER. And this would be my critical ice line. If the asset falls underneath there, well, this momentum, this whole reason I would want to take a trade on this asset is invalidated. So I would get out until I have a certain, set of circumstances that would tell me it's a good time to enter. And like you were talking about earlier, I do use Fibonacci retracements. On this particular asset, because of the type of harmonic it is, I have my Fibonacci retracements from X to A. That's for targeting prices on the way back up. Generally speaking, you would go from D because that's the retracement off of A, and then that would give you targets on the way up. But I would also go ahead.
So can you just walk us through the harmonics and the tool that you're using for that?
Sure. To put this on the chart, you use the XABCD tool, which is available on Benzinga Pro and TradingView. And what you're going to look for a pattern like this to form is after a significant markup and then a retracement off of the highs. And then you're going to start at your swing low, which is down here. That's my X. A bullish harmonic, which is what you were looking at, it kind of looks like an M. That's the way you would identify it, just looking at a chart. Bearish harmonic looks like a W. They're kind of the polar opposites.
Okay.
But with a bullish harmonic, you're going to have your X, which is your swing low. You go up to your swing high, and then a retracement off of that is going to give you your point B. And all these, you see these numbers here on the XABCD tool, those are all Fibonacci levels, right? This is your X to A, and then the 658 is the retracement down to B. And it sounds much more complicated than it actually has to be. But generally speaking, the more you know about these type of structures, the better off you're going to be. After your B point, you'll get another swing high where it hits the demand line coming down from A, right? This would be, if you were drawing a trend line, that would be your trend line coming down here, and it hits your supply line. This is where traders are selling this asset, coming down this trend line here. And then your D point would be the completion zone. It's the PCZ. You want context behind that, right? You want this pattern to complete historically, where this is generally a place where the asset reverses. Historically, there's support in that area. So you want that context, right? You don't want this D point just to be in the middle of nowhere. It would make sense for that to be the completion point, because that's a support level. And most of the time with harmonics, like I said, you'll get the spring, and then you'll get the back test of the spring. So you'll go over resistance and come back down and test it as support now. So with the harmonic trading, all these harmonics, there's a bunch of them, but they all have targets. This is a bullish Gartley, which is kind of the godfather of the harmonics, right? Because it has one of the most dramatic targets coming off the swing back upward, which on the bullish Gartley, now I've got my Fibonacci retracements backwards, just the personal preference. Normally you would go, if I was doing on the bullish Gartley, you do the X to the A. Normally you'd come from the top down to A, but because mine are reversed.
I do mine reverse all the time, and occasionally there's someone here that calls me out on it.
Yeah, it's the same exact thing, but I like the idea of, because I'm taking targets upward, just the way my mind works, I like having it reversed because it makes more sense to me. But it's going to give you the same targets, regardless of which direction you do it. So the most bullish harmonics, you're going to have two targets, and it's usually the C and the A, generally speaking, sometimes the B. But with this one particularly, my first targets on this asset would be C and A. Now, aside from those being targets of this harmonic, I would look again to the left. Well, my C point, historically, look, resistance, support, support, support. I mean, historically in this asset, you can see that price correlation is drawn to that area all the time.
Wow.
It's clearly an area that traders have set up, whether it's a resistance or support, buys or sell zones. And look, the first place that initial reaction went is right to that zone. It makes sense. So on the way back up after the confirmation, I would look at 168 again. And then, your next zone would be A. But I like looking at, the details.
This is very, very, very cool. And I have a question. Have you traded Palantir at all?
Yep, Palantir is one that I've actually brought up on my stream with Benzinga before. I can bring that chart up as well here.
I was just wondering, because that pattern looks like Palantir to me.
Palantir's got a pattern like that, and it's one I jumped the gun on a little bit early without following my own rules.
Yep.
But I can bring that one up because that's something I do have charted already.
But a key thing that you said about this, which absolutely makes sense, is that you need some price history to confirm the levels that you're looking at.
Well, with trading and with my strategy specifically, you always want confirmation. And same thing like I was talking with this D point. Just because that's the pattern completion zone, I want some confirmation. And if we look to the 4 hour on this asset, one of the things I always look for when I'm taking a trade is who's got control of the ball. And I use the MACD for that. Right here, you've got the price is going down, right? This is the pattern completion zone. So this is where you'd expect the price to be going up. So if I look down here on the MACD, well, look at my negative momentum. My negative momentum is starting to get less and less and less. So even though the price is coming down, there's not, the negative momentum is, starting to go positive, which is bullish divergence. Right here, the bears have control. It's a seller's market. But right here, they're losing control. This negative momentum, it's not getting stronger, it's getting weaker. So that would be an indication that at this point, you're going to see a reverse to the upside. And I look for the same thing on the RSI, which if price is coming down on the asset, but the RSI from that point to that point is getting stronger. So even though the price is still coming down, this asset is gaining strength. The momentum is switching, the strength is building, and that tells you that impending price action, correlation, reverse to the upside. It tells you that price is going to stop coming down and start moving up. And that's what you want, the confirmation. I'm not just going to, go long, YOLO at D, because that's, that's where it's supposed to reverse. Look, why wouldn't it? I've got support here. I've got support historically at that zone. And both of my oscillators here are telling me that, hey, even though that price is still coming down, the sellers are losing control. The asset's gaining strength. And if you look at the RSI at that point, your sellers are exhausted. This is a point of oversold. So you've got 3 different things telling you that would be a point you'd want to take along. And, further than that, this is a value zone, because if I take a long here, I'm not in the middle of a zone. I'm right at the bottom. So if I'm wrong, I know where I want to get out. And with my trading strategy specifically, I don't take trades unless they're 3-to-1, because in trading, you want the odds stacked with you, right? You don't want to fight the odds. So any trade you take is going to be 50-50. It's either going to go up or it's going to go down. So if I take a trade, and I always use the long tool to size up, my risk to reward. If I take a trade that I'm risking 1/3, did I say that right? I take 3-to-1. I want 3 times as much reward as I'm risking. So that if I take this trade 3 times, I only got to be right once. So if I got 50-50, just flipping a coin, well, now I've got the odds stacked towards me that if I take 3-to-1 trades, I only got to be right once, which puts the odds in my favor, no matter what the asset is, no matter what the trade is. But with this, this zone I've identified here, I know that if I get in right here and it falls underneath this support, looking left here, well, I'm not going to want to be in it anymore. So I can put my stop right underneath there. Say I put 10% risk. Obviously, that's not 10% of my portfolio. That's just 10% of what I put into this asset. And if I wanted to take this trade, even the lowest level on this reverse, I've got 6-to-1 reward to risk. And again, the trading method I use, that if you stick to those rules, the odds are in your favor. It doesn't matter if you're wrong. Half the time, you're still going to make money because you've got this, these odds stacked with you.
I want to briefly interrupt you to just to settle something. There are a couple of people in chat. I don't know why they're so confused. I really wish the chat would do some more reading before they came to the show. But that's okay. I'm just going to ask a question for him. If you're drawing, you say the Fibonacci, which I think you mean the Fibonacci. When you're drawing that, and you do anchor it the first point at the top.
Yeah.
Do you ever go to the left with the next anchor, or do you always have to go to the right?
Traditionally, the way that Fibonacci, the rules behind Fibonacci, you want to go left to right. Have I noticed that there's a difference in the price levels? I've not, but that's what you're supposed to do. But if you look, the levels come out the same, whether you go right to left. But yeah, you're supposed to go left to right.
But it's like we trader to trader, we know we don't have to. We can break that rule, right?
That's how I learned. I learned left to right. But again, like I just showed you, if you go right to left, the levels were exactly the same. I'm not real familiar with the basis behind the reasoning. But that's what they say, left to right. And I think it's maybe I'm wrong here. I think it's less left to right, putting this on there, more if you're trying to look for future levels from a retracement. I don't think you can use the levels moving right to left. It's more, again, history looking forward.
Makes sense. Makes sense. Yeah. No, thanks. I'm glad that settled a little dispute among the traders. So
of course. And one last thing I do like to look for, again, it's just one more form of confirmation for me, is I don't mean to be zipping around my chart so much on you guys here. I don't want to make anyone dizzy, but I want to look for a Japanese candlestick reversal. And right here, if you look, at support at the PCZ, where we expect this asset to reverse, well, look what we've got. We've got a piercing line reversal, which is a Japanese candlestick reversal pattern that signifies that the price coming down, you hit this support level, and then you engulfed, and this candle on the daily engulfed more than 50% of the previous candle. And that's why they call it a piercing line, because it's you've got this bearish candle and then this piercing line that goes and engulfs the entire candle before it. So I've got all these factors telling me that would be a great place to enter a trade. And I'm not looking for 100%. This very well could reverse and drop underneath here. But you know what? I followed every one of my guidelines. I have no emotion behind this trade. The odds are stacked in my favor. If I'm not right this time, I might be right the next time. And one of the strategies I do use on failed trades that I've been stopped out of is the 84% rule, which basically means if this is a good trade and I've followed my rules, that if I do fall underneath here, if price action fell out, whether it's market conditions, news-driven catalyst, whatever the case might be, if that asset comes back up, I can use my same entry, my same stop loss, and my same targets, and 84% of the time, that's going to be a successful trade the second time around. And I had a couple people ask me last night on stream about these moving averages here. You see this green and this one with the orange dots. Well, first, I like the dots more than the line because these moving averages, this orange one here is for momentum. This is something I've kind of customized myself. And this green one is the MFI. On TradingView, I think it's under MFL, but it's basically the money flow. It's the money flow index, and it tells you if it's going up, there's money flowing into the asset, and if it's going down, money's flowing out. So this would be the last form of confirmation that I've got. And looking at this zone, you can see that money flow, even though it was coming down, is starting to curl back up. And if you look at this momentum moving average, when these little dots start, when they turn orange, that indicates that the momentum's picking up. And if you look right here, I zoom in just a little bit, you can see them orange dots are starting to, they're starting to show up again.
That's really cool.
It works basically the same as a regular moving average. I mean, it's the same idea, but I use these dots because if you look, when these dots get congested, it indicates that you're gonna start to get, a move of some kind at that point. If you look here, they're congested, and then when you get that big move, they start spreading out. And the further they get spread out, I look at it, at least the way I interpret it, it shows you that move is starting to lose strength. Once they get super spread out, it's not real stable. And that's kind of the same idea as, why they bunch together like that before a big move.
Well, sir, I think we're right about at time. So
sure.
Let's end it on that one. You showed us two things that have never been on the show before, perhaps three, which are the indicators that you've shown us. So I'm sure that there are a bunch of people here, I know I am, that are interested in learning more about how to use those and how that fits into the way that we currently just look at price activity. Tell me, sir, where can folks catch your stream, and what time is it?
We do a stream with Benzinga every Tuesday at 7 p.m. And it's about an hour long. I like to look over different charts. I like to talk about the strategy. And again, I just drill in the same ideas that I talked about today over and over. It's got to meet a certain criteria. And I stick to my plan without emotions. And that's just something that I drill over and over on the stream. And I am on Twitter at Trade Nomadic. I do have, a graphic, kind of like a cheat sheet to help you identify some of this stuff with the numbers and, a picture of it too as well. But yeah, I'm happy to be here. And if anyone wants to join us Tuesdays, we do it 7 p.m. on Benzinga.
There you go. Tuesdays, 7 p.m. Benzinga. Let's get the Twitter handle in there. Producer AB, get out of your box and make sure folks follow Trading Nomadic for more lessons and to get that cool graphic. Thanks, man, for coming on. I really appreciated the lesson. It was educational. All right. Have a good one. Everyone else, including other Neil in the chat. Do you guys know there's another Neil? Here's one of his cute little comments. All right, you got me with the Fibonacci. I learned something today. But you know what? It still kind of lines up with other price levels. It's weird. So I don't know. But I appreciate the lesson. Thanks so much for joining me. If this video gets to 200 likes, I'll water the plant. Also, get to Benzinga swag. Get to the Benzinga swag store for these Benzinga shorts. 200 likes, I water the plant. Video doesn't get to 200 likes, it's dead. All right? And I'm going to bury it outside of my apartment in downtown Detroit. I'm gonna dig a hole and bury it. At any rate, thanks so much for tuning in. This has been another episode of the chaotic new scheduled Get Technical. With me, as always, has been producer AB. I'm Neil Hamilton. Happy trading.